Let's jump right into it. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are going to be placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Really strong rally day today. Maybe getting ruined a little bit by Netflix here after hours. Let's take a look. Yeah, so first of all, don't sleep on this IBM. With this new CEO, I don't know what it is about these tech companies. Once they bring in the Indian CEO, the whole company starts changing. I feel like we've seen that happen multiple times now. Don't sleep on IBM. Netflix, opposite story. Oh my God. Netflix off 20% on atrocious, yeah, Rowan, on atrocious numbers here for Netflix. Bad numbers, bad guidance. Looks like they're blaming a little bit of it on Russia. Yeah, not good. Maybe taking some of the steam out of this big picture rally we had here for the market. We'll take a look at it in a second. Wow. Look at this pullback in Netflix right now versus the pullback in COVID, which, you know, we know that Netflix probably held up better than most other things in COVID because it was like a stay-at-home play, right? Everyone's just going to be streaming. I'm sure you guys remember back in 2020, I remember speaking to friends who like watched every single show that exists on Netflix. I was the opposite. I was working my butt off during COVID trading this market. I didn't have time to really watch any TV. Though I did watch that Tiger King, which I thought was hysterical. I haven't seen the new season or anything else that they've done with it. I haven't seen Bridgerton, actually. I haven't seen Bridgerton. I probably should check it out because I'm a really big fan of Downton Abbey. Downton Abbey. That's my show. Get it right. Phenomenal show. I don't care. I went to the movie theater and I saw Downton Abbey. And it was me and my wife and like 4 people with white hair. And that's the last movie that I think I've actually seen in the movie theaters. Was the first Downton Abbey movie. I know there's a new one that has come out. But yeah, look at this down move here in COVID versus this down move in 2022. Oh my God. Can the Fed please come in and help Netflix out a little bit or something? This is getting pretty wild here. You got some bigger support areas down into like this, 450 area here. So it's starting to get tested right now. Just getting absolutely toasted. And let's see if it's doing anything to our very impressive NASDAQ rally today. And it sure is. Where did we close on the Qs today? We closed around 346. We closed at about 346 in the Qs. We're down $3 here after hours. We're down here $3 after hours, just because of the Netflix numbers. Which I want to analyze those technicals in a second before where we were. And SPYs here. This is just not a great start to the earnings season. SPYs here closed at 445. So we traded almost up to 446. 445 is the key level. It's the key level that I've been talking about that we need as a closing basis. We closed right at it. And now Netflix has brought the SPYs down $2 here. I remember thinking this last earnings season with Netflix also, they almost need to not have Netflix be the first FANG stock, which I've also been arguing that they need to take Netflix out of the FANG acronym and replace it with NVIDIA. But they need to take Netflix out of the FANG acronym, and they need to stop having it be the first major tech stock to report, because it's just putting such a dampener on the start of earnings season. Like, I feel like if Apple and Amazon had already reported it and their numbers were even just fine, and then Netflix reported, the big picture market wouldn't care as much. But because Netflix is first, I think it just kind of sets a tone here. and this market is SPYs are off $2 from where we closed. So, wow. Anyway, let's talk about our big picture technicals. Let's review our game plan from the morning meeting today and see how it kind of worked out. I expected that the market was going to rally and be led by tech today. So I'll give myself a little bit of credit, but I can only give credit where it's due because my reasoning behind it really didn't follow through. I thought we were going to see a rotation out of energy, a small time frame initially rotation, maybe a day, maybe a couple of days, and then whenever we get that type of situation, we can see then if it builds into and turns into something more. But morning meeting game plan today was to actually avoid the energy stocks that have treated us so well and potentially focus on tech. And there were two main thought processes I had that led to that conclusion. One was the parabolic nature of certain things kind of in the energy and material space. Like UNG in particular went totally parabolic, gave a high volume shooting star yesterday, and now today corrected down into equilibrium. A stock like AR is going to be similar, which is a nat gas play. You got some of these other energy and material stocks. Like look at this Nucor here. Actually, this Nucor actually closed really well. And even like USO, which is not parabolic, got into the upper end of this range. It's actually starting to build out a really big picture wedge here right now for USO. It got into the upper end of this range here and kind of failed yesterday and then was kind of gapping down. This chart here actually reminds me of gold back in like 2012. This high level wedge that's being built out a little bit. Let me review that. It's been a long time. Where can I find that chart? Here it is. This actually reminds me a little bit of this pattern, which was technically a bullish pattern that failed. You can see here this pattern, there was that intense rally in 2010, 2011 in gold, and then it built this huge symmetrical triangle that then broke down. I remember actually in 2013 shorting this in here and doing well with it. I think this was one of my better trades in 2013, shorting the breakdown of the support. Partially happened via gap. It almost feels a little bit, I don't know if it's going to have the same result because technically a wedge like that is a bullish pattern. But it's almost starting to remind me a little bit about how this USO is building out at this upper area here. But so that was part of my thought process was I think that these energy material stocks need a break here again. And some of them have gone totally parabolic. The other thought of the process was definitely wrong. And it was based off of the TLT here. I had on my game plan today, and it was part of my thought process on why I thought tech could be strong today and growth could be strong. I had in my game plan today that you could look to buy this TLT. I don't normally find TLT as a good trading product. It's not something I normally like to trade. It's normally kind of similar to the VIX. I'm not regularly trading the VIX, though I will sometimes take a VXX or a UVIXY position. I'm not regularly trading the VIX. I'm more watching it for information, which, by the way, Pat providing that information on the VIX, and particularly the VIX of the VIX, the VVIX, the volatility of the volatility, was one of the big clues, actually, that led to the rally today. I thought that some of the rally could come from this TLT, as the move here in April has just gotten so extended to the downside that I liked the idea of buying this on the way up. Yeah, Pat did really well today. Pat really crushed it for the team. That Microsoft buy that Pat called out today was also just fantastic. Yeah, I thought that some of the rally might come off of a TLT bounce. Some stabilization in bonds here would be really good for the market, even if it wasn't a massive bounce, just some stabilization. But the degree of this down move in the TLT here in April is really kind of getting wild, and I'm impressed and almost slightly nervous that the market, it's the only thing, and obviously now maybe Netflix ruined this, but at that 445 close for the SPYs, at the 346 close for the Qs, 202 close for the IWM, which are all kind of at or above some really key levels. I really did think that we were going to be leading to a kind of a break higher here, just purely looking at the technicals of those charts. Except I don't understand how we can rally with good consistency without the TLT at least stabilizing. Because this move up in interest rates, this move down in the TLT, especially over the course of the month of April, has been dramatic. And I said, don't buy this thing on the way down. Let's buy this thing on the way up. I was actually talking about a buy through, 119.50. Someone else on the team said, maybe a buyback through yesterday's low. Either way you took that, if you took that, it failed. Luckily, it didn't trigger early. So I don't like the buy through 119.50 kind of midday like this in the same way. You just kind of watch it and see if it gives follow through. Though I know some people, and I did call this out, cheated and bought some TLT early here before the break of 119.50 because it was trading well. I think I called it out, like 119 was the pre-market low. Put in this low here on the third bar at 119.08 and started to bounce back. I think I called it out pretty early on this. A few people got involved. I hope you guys are able to get your risk covered because that totally failed. When this thing was at 10 a.m. trading below 119 and the Qs were doing this at 10 a.m., honestly, my mind was blown. The VIX there, again, was really the big factor that helped lead to this market rally. And again, it's the TLT here that is the one concerning factor that does make me believe that maybe we're looking at another short covering type rally. Because we do know that the funds are still kind of underinvested, which that could turn into buying in time. So again, just really interesting to me that the market was able to be as strong as it was without the TLT. The VIX is what told the story, and Pat was all over this early. So again, real shout out to Pat. As far as our closing technicals, what I've been saying is that this market is sloppy here, and what we need for the market to become bullish again is for the market to get back above and close above 445. Well, guess what? The closing price is 445.04. We literally closed at the price that I need us to be above in order for this market to start looking a little bit more technically bullish. And now we're down. Now we're only down $1.50. It was $2 before. We're down here off Netflix, so we'll see if Netflix puts a damper in on that. As of right now, whereas originally I thought we could get continuation tomorrow, as of right now I'm thinking we might have to gap down tomorrow morning because of Netflix, and then we'll see. Close above 445 is key for the SPYs. For the Qs here, the area really is this 347, though more ideally 350. And also, where did we close on the Qs? Qs closed at 346, so we closed kind of just under the first spot here for the Qs. We traded right to it at one point. So same thing with the Qs. They kind of got right to that spot, but we still don't have that absolute close above the level that we really need and want to look for continuation. And the IWM being above $200 is definitely a good sign because $200 has been a key inflection point for the IWM. But the more near-term resistance that corresponds to your SPY 445 and your QQQ 347 to 350 is this IWM 202. And this is another one here that closed pretty much exactly at it, or just, I guess, just a little bit under it. We're trading at 202 intraday. We closed 50 cents below it. So, again, really strong day today. We closed literally right at the levels. So we're just kind of at that borderline where maybe this market can start to turn a little bit more bullish from the bearish tilt that it's had. Though my concerns are, one, TLT not participating, which maybe makes it more of a short covering rally, though we have seen in the past short covering rallies become actual real rallies as new long flow starts to come in. That being one, Netflix being number two. But the sell-off in the VIX and that VVIX that Pat kept talking about is also really important. That did turn out to be the real catalyst because then you kind of get those, the vol control universe that Pat likes to talk about in his morning meeting. All the funds that, increase exposure and decrease exposure purely based on volatility. The VVIX falling off a cliff today and making new year lows. potentially brings some of that buying back into play, and that fund flow could also have led to today's rally for sure. So definitely a really productive day for the bulls, but I would say that we are not totally out of the woods yet for them. We still got to clear these key levels. We need this TLT to at least stabilize, at least stop going down, if not give a snapback rally. And maybe Netflix is putting a little bit of a damper into things as well. So again, just to recap off the big picture game plan from the morning meeting, best I can do is give myself partial credit. I got what I was looking for, but the why behind what I was looking for, which is something that I think is really important, wasn't perfect. TLT just did not participate. Bonds still very weak. Let me see here what else I got for you guys. As far as trades go, again, I really think shout out to Pat. This Microsoft call out that he had through 280 that he had written in my morning note was definitely a money trade here on this 280 break. I was looking for some of these growth stocks to be able to rally. Particularly, I mentioned some that were holding up well yesterday. Like Path, I thought actually held up really well yesterday, considering what the market did. It closed off lows, though the volume on it was really low. So this was a focus for me. It gave a not so bad rally here, up 7% on the day. Staying away from energy stocks was beneficial for me. The tell that I'm in actually held up better than it should than I would almost expect. The tallow that I'm in, I'm still. This is actually the pullback I want to resize up on this thing. I sold most of my position actually into 20. So I'm looking for a pullback off that extension into the ADMA area to size back up. XLE was out of play as expected, but didn't pull back. So again, what I was looking for was some rotation to come out of energy and into these other things. It was more like energy took a break and the other things all took a really big rip. Plug, I know some of you guys, we talked about Plug in the morning meeting, and some of you guys were able to capture this. Really, I was looking at 2750 as the level. I love this little buy setup in here though. Extended to the upside off the news, pulls back into the ADMA, creates that little pivot point off the ADMA, and then you get involved and you got your upside continuation there. So I think a few of you guys caught that. Though the actual break of 2750 was actually very clean, and it's a good looking ignition bar. Not a trade that I like to take at 10 after 11 though, to be totally honest, but very clean ignition bar. Actually looks like you could have even bought that for relatively low risk here, 15 cents risk or so. And that gave also kind of decent upside continuation. And that was pretty much it. I know we had semis on the radar today, even though the semis, SOXL is what I automatically type up because it's what I trade. But SMH you can also look at. This SMH came down to a really big support level. The downside of this idea is the fact that this was the weakest area here in the pullback. We've spoken about how of the March rally, SPYs have pulled back about 50% of their March rally to here. Qs have pulled back a bit more than 50% of their March rally to here. Semiconductors pulled back 100% of their March rally. So you can very clearly see that it was semis that were leading us down, which we did identify when Taiwan Semiconductors came out with that bad note back at the end of March, but then had good relative strength yesterday for the first time. So we thought maybe we could get some continuation on relative strength. So semis were okay, but like Micron, which we're looking at for 72, was definitely not great. And this is another one, right? This is why we come up with our ideas in the morning meeting, and that's great, but then we really need to make sure that our other factors are confirming when those ideas are triggering. Because whereas Pat's Microsoft idea through 280 was still in that first half hour of the day, Microsoft was showing more strength than some of the other tech names there. I remember being a little bit concerned that Apple wasn't participating properly. You've got like this Micron, when it was actually triggering through the $72 area, it just, I don't know, it didn't look right. The volume wasn't high enough. So even though it gave some follow through, maybe not one that you want to have as high of conviction in. And that's pretty much it. That's pretty much it. Definitely, I needed today. I've been, it's been a tough week or so of trading sessions. 5-6 trading sessions. Actually, maybe even the last 8 trading sessions here have been really tricky overall. And I know a few people have been struggling. We've been consistently over the course of the last, 6-7 trading sessions identifying that we need to have a less is more approach here because the market's been sloppy and tricky, especially last week into yesterday. This price action in here, very choppy, really not great. I mean, even today, we still don't have conviction that the market broke up. But today was a solid day that it sounds like a bunch of us were really able to kind of sink our teeth in, which is fantastic. So that's really all I got. That's really all I got. Happy to take a look at any questions that you guys have, thoughts, concerns, stocks that we should look at, anything like that. Ben asking me if I've ever seen a bigger miss than those numbers for Netflix specifically or for all stocks. I don't know. I don't know the answer on both, actually. Those numbers are massive misses. I mean, when you're dealing with companies with that large of a market cap, that's kind of where it can come from for sure, because you got big number expectations and then it totally misses it. But those Netflix numbers were certainly atrocious. I think that 250 to 260 area might be a spot to take a look at this thing, but you got to be very careful catching a falling knife in Netflix right now. But I think the 250 to 260 area might be a spot we can pay attention to in this thing. How did Paramount do? Did we talk about Paramount today? Did Paramount have earnings, or is it just trading as a secondary right now? Yeah, Paramount's down 3.5%. Looks like it's a secondary off Netflix, so that's getting hit. I don't really trade this name too much. Justin saying that every media company does what Netflix does now. Netflix had a huge head start, and they still fumbled the bag. Yeah, I mean, that's what I was kind of saying sarcastically earlier. Like, who would have thought that streaming might not be the greatest business in the world? And, when you really start looking under the hood, I think, of the current state of streaming, you got so many competitors that are out there right now, and they have to spend. I remember talking about this with you guys, I don't know, maybe a month or two ago. Might have even been back at the last earnings season. But I don't remember exactly what the numbers were, but I was reading through or listening to some statistics on kind of the streaming business. It takes a lot of money to get one of your shows to really be like the top streaming show, and that's what you need to kind of get your company to get the subscribers. And now there is just so many people in the space, and they have to dump so much money to be able to get it, that these companies that are involved in this space might not be worth the multiple that they were worth earlier. So Netflix here getting destroyed on a miss. Disney here getting hit after hours. Paramount getting here after hours. What's that Warner Brothers doing? Recent IPO. I think it's WBD, right? Recent merger. Yeah, WBD here, not fantastic either. I still don't, this merger with Discovery, I don't get. I've been listening to that Discovery in my drive down to Salt Lake last weekend. I was listening to some interviews with the Discovery CEO, and the guy seems like he's the most overpaid CEO in like the history of the world. Like, there's CEOs that get paid a lot of money, but I mean, this guy gets paid a lot of money, but for what? I don't even understand. The guy just sounded like completely out of touch. But yeah, so definitely a tough business right now to be involved in with the streaming business. But we'll see if that moves into the entire kind of tech sector over the course of the next couple of trading sessions, or if the market's able to shrug it off as we go into some more important earnings reports. From DJ here, how much time did you spend on trading psychology towards the beginning of your career, and do you think you put enough focus on it, or would you focus on it more if you could go back? So it's a really good question. Trading psychology is something you have to pay attention to really throughout the entirety of your career. I actually think that trading psychology is something that becomes more important as you become a little bit more experienced of a trader. I think that, sure, you want to do enough reading, do enough research, where you have an understanding of what appropriate trading psychology is supposed to look like, even as a new trader. But as a new trader, you got to spend so much time learning market mechanics, right? I really think it takes 9 months, 12 months as a new trader just to learn market mechanics, how and why markets move, how to trade them, you know, how to route your orders, execution, learning, you know, your patterns, learning your layers of probability. Like, I feel like that has to be kind of a really big focus as a new trader, just getting through that learning curve. And then after you've been doing this for 9 to 12 months, and you've really gotten through that learning curve and you have a good understanding of things, that's when it really becomes, once you're through the initial learning curve in the business, I really think this becomes like 75 to 80% psychological. It's understanding your own psychology and understanding the psychology of the market participants that actually create the market movements. So do I think that having a good understanding of appropriate market psychology as like a brand new trader, let's say you're less than 12 months in, is important? Yes, I do think it's important. Yes, I do think that when you're doing your journals, you should review your state of mind, because it's going to be a big part of it. But I also think that you got to spend so much time just learning market mechanics that, you know, that almost trumps initially your learning towards market psychology, and then it becomes all about it. It's a great question. I hope that helps. From Gabriel, do you think TLT is in play tomorrow again, since there were some dovish comments today from Fed members? Well, do I think TLT is still in play tomorrow? To answer the first part of your question, yeah, I do, because of the extension. I think that comments that came from Fed members today would already have moved bonds today. So I don't think it's necessarily because of that, or unless there's going to be more Fed members that are speaking tomorrow or whatever that I haven't done my research on yet, which would also obviously potentially have an effect there. Okay, Damien, just be careful. Just be careful. If it's a small initial feeler position, that's fine. Just don't get caught, you know, holding the bag on something that is absolutely bleeding out. Gabriel saying that plug had bullish option flow at 9:50 a.m. pivot also. Yep, so that's one of your layers of probability. Oh, perfect here. Yeah, you love that. Pulling into the ADMA, creating your pivot point exactly where you want it to off of equilibrium, and getting hit with bull flow as an extra layer of probability. That is exactly the type of stuff that we're looking at. Yeah, ISRG. A great call. Will here, WA27, all over ISIG early on for the team, and did a great job communicating it also. Awesome initial momentum rally, gave this little flaggish type pattern that could enable you to build in, and then just gave grindy continuation for most of the day just to close at highs. So yeah, great job and great call out for that ISRG. What's this daily chart look like? Yeah, clearing kind of your first resistance levels here. You got bigger range resistance that this still has to work its way through. It's like the area between 303 and 308 kind of zone. So see, it's still $10 away even from the beginning of that zone. So we'll see what it looks like when it gets up there. But definitely really solid potential day one here for ISRG on good volume. You will still need the cues to be able to cooperate and break through those levels, which right now Netflix is having a dampening effect on that. From Justin here, what to do if you did not have such a great day today? I always feel bummed when the market goes up and I do not do well. Sure. So this is a thing that you got to be really careful about, and this is actually a thing that I think is better for traders not having an office, amongst many others. Which, you know, maybe today it looks like the market's up a lot, and it looked like a lot of people on the team did really well because a lot of people on the team did do really well, where you kind of feel like FOMO on that. But I remember being a trader on the trading floor for T3's trading floor in New York when I was new, and it was such a bad feeling when you know, you did not have a good day and everyone around you crushed it. That was like the worst feeling ever. And we don't really get that in the same way anymore, I think, on a remote basis, which is a good thing. But look, there's nothing you could do about it. You just got to make sure that you did the right things. So that's the real question. I'm a believer that if you did the right things, we're in a game of probability. And if you did the right things and you did not make money, that's still a good job. If you did the wrong things and made money, it's a bad job. So you got to ask yourself, like, did you have a game plan this morning that was based on research? Did you follow your game plan? Maybe you didn't have conviction that the market was going to have a rally today. And if you didn't have that conviction because the market's been super sloppy over the course of the last 5 days, so you weren't aggressive on your trading because things just didn't look right to you, and you didn't make money today and didn't capture this rally, that's not a bad job. It's not a bad job. So it just kind of is what it is. I know sometimes it's hard to shake off our feelings a little bit at the end of a trading session if we think that we underperformed, or honestly sometimes even if we did really well, you can feel too good about yourself. That's definitely a feeling that I'm familiar with, and it can be bad. It can be detrimental also. The most important thing I always think is to start the next day even keeled. And that's a big part of trading. And you got to be able to do it day in, day out, regardless of your account balance, regardless of how yesterday went, regardless of how last week went. Every single morning when you're approaching your research, when you're approaching your trading session, you just have to say, you know what? All I have to do today is do the right things consistently throughout the day. That's all that matters. Yesterday doesn't matter. And you just do your research, you come up with your game plan, you listen to the team, you implement in some of the information, and then you execute, and the results will be what they will be. So don't let it get to you, Justin. I've always benefited from going from a good workout after the market closes if I am feeling a little pent-up emotion or pent-up energy from the day. Peloton assumed with buy from neutral at Citi and Airbnb also. Love Airbnb. From TG today, I bought Oxy yesterday, covered my risk, and held the rest overnight with my stop at 59.93. Great. I was subsequently stopped out this morning on the first 5-minute candle. Can you please explain how you handle your stops that may be in play due to volatility at the open? Sure. So I'm glad you brought this up because I don't think you're the only person who had that trade and got stopped out. So yesterday we did have Oxy on the radar for a long. It worked decently enough. You know, it was that great opening momentum drive, if anybody was able to capture it. I know some people got shaken out right off the open, but anybody who caught this great opening momentum drive, the pullback was more than you would like it, but it still held lows, then it closed okay. So if you got an okay price, you know, if your price was 60.50 or better and the stock is closing at 61 and change, you know, 61.40, 61.50, you're $1 in the money on a $61 stock. I think that it's fair, especially with something that's so relatively strong, to then add it as a swing trade to try to maximize your reward, because even if the stock were to gap against you, which is what I think happened today, and trade lower, you've got enough of a profit cushion where it's not the end of the world. So because you followed those rules, TG, even though it's obviously unfortunate to ever get stopped out of a position, you went home with a profit cushion, it gapped down against you, you got stopped out at your stop, it's not the end of the world. As opposed to a trader who puts their trade on intraday, it closes against them, they keep the position overnight, hoping and praying that it gets back to their price so they can get out at break even. That's called unlimited risk for zero reward. It's the opposite of what we want to be doing as traders. So the first thing I would say to you is I actually think, provided that your pricing was good, and I don't know your price, providing that your pricing was good, which I'm assuming it was because it's when we were looking at it early yesterday, that you did a great job by holding this thing and looking to maximize your reward in a chart that has just been fantastic, a stock that's been fantastic, and something that looks super bullish. As far as getting stopped out in the first 5 minutes of the day, I don't do that. So I have a rule, and over the course of my career, there's been 1 or 2 times where this rule has hurt me, but without a doubt, there have been more times where it has saved me a lot of money than otherwise. It's called my 15-minute rule. I don't get out of swing positions in the first 15 minutes of the day that are gapping against me. I wait till 9:45. Whatever the low, if it traded through what my stop loss is supposed to be in the first 15 minutes of the day, or a gap beneath it, whatever the low is at 9:45 becomes my stop loss. And yes, this opens me to technically unlimited risk in the first 15 minutes. And maybe, though I don't know if I've ever actually done this, maybe I would violate the rule in like a real major news situation. But honestly, even then, probably not, because then at that point it's already, a major news situation where it's gapping against you. So what I do is I implement this 15-minute rule. The reason why it exists is because when a stock gaps down, like Oxy, and this Oxy is not actually too bad of a case, but when a stock gaps against the market, gaps against you, a lot of times what that can create is opening panic selling. Opening panic selling, we know, and we've discussed this from a big picture market perspective, typically lasts no more than 15 minutes. Sometimes it will last actually as long as like 30. Sometimes it'll even last in like a really extreme situation for half a day. But the vast majority of the time when panic selling comes into the market as a result of a gap, it lasts for 15 minutes. I don't want to be puking out my stock into panic selling. I don't want to be selling with the fearful dumb money that's doing it. I want to take a half step back and be cool, calm, and collective and assess the market action over the course of that first 15 minutes. And if it's trading poorly and I lose an extra however many cents on the trade, it just kind of is what it is, because I can't tell you how many times I've had things gap to my stop loss, gap past my stop loss, or gap to my stop loss and trade lower, and then that becomes the low of the day. And I don't get stopped out, and then next thing I know, it's trading well. And as a matter of fact, oftentimes what I'll do in that situation is once that first 15-minute low is established, I'll actually add to my position versus that low. So to have even more stock if I can get that bounce or whatever. So like if you did that in Oxy today, your stop loss was yesterday's low. Your stop loss is, 59.93. Low of the day today is 59.83. Instead of getting stopped out here in these first 5 minutes, I actually probably would have been adding to my position on this bar here with a stop at now everything here, and then I would have been booking some of that into this up move here into the gap fill. So that's what my 15-minute rule is for swing positions. Look, without a doubt, I just want to reemphasize, there is danger to that rule, but I am very certain that over the course of my career, this has saved and made me significantly more money than it's ever lost me with the extra amount that the stock might go down over the course of that first 10-15 minutes. So I hope that helps, TG. From Damien today, I did very well trading the Qs today. Love to hear it. I love to hear it. I caught around $6 of the move it gave. My conviction to be a buyer in tech this morning stemmed from 1, the research I did over the weekend on short exposure of various types of funds. Cool, that corresponds with the research we get into the VTF and Pat's note. And 2, the chatter in the VTF that we might be seeing a rotation to FANG stocks. And 3, the degree of extension and the increasing probability of mean reversion in TLT. Yeah, Damien, you're summing up a lot of my thought process here as well. It's just really, it's really interesting to me that your third point, the TLT move, didn't actually work out and was not actually in play, yet the market still did kind of what we were looking for it with the TLT move. I'm just reading through the comments here. Goldman Sachs scraps free lunch, marking an end of pandemic perk. But do they give lunch in the office then to them for free? I'm telling you, I've already spoken to people about joining T3. People don't want to work at these companies anymore that are going to be this hardcore about coming back to the office. People just don't want to deal with it. Not when the job market's as hot as it is. Not when, and it used to be that, you would go to Goldman because that's where the money was, and you would suffer. You would just suffer at Goldman in their, investment banking analyst program because of all the money that you could make. You don't got to do that anymore, not in this day and age. You can go work for a tech company, be the 20th employee, get stock options that could be worth a lot of money, get a decent salary, get a lot of potential upside, and have a 4-day work week with flexibility on working from home and everything else. No one wants to work for these companies anymore. That's my opinion. From Policing Pips, if you were having a great day, do you have a hard cutoff where you maybe scale down size or stop trading altogether? Great question. I always love the money management questions because this is really, I think the key to success. I don't ever want to limit my upside. What I'm not a believer of is, what's a good day for you? Let's say, I don't know, $1,000 is a good day for you. So you're up $1,000 and you close out all your positions and you go, I don't know, you go for a hike. I'm not a believer in that. I don't ever want to limit my upside. I want to only and exclusively limit my downside. I want to limit my downside. I want to leave my upside as unlimited as possible. With that said, if making $1,000 is a good day for you, you can never allow that making of $1,000 to become a negative amount. You should never, in the same way that you don't turn winning trades into losers, you don't allow yourself to have a game plan. Does everyone remember that Roblox trade I went over a few weeks ago where I made a whole bunch of mistakes and I turned a break-even trade into a loser? I went over that on purpose because I did a really bad job and I thought everybody could learn from it. In the same way that we have a game plan in place to not turn winning trades into losers, we need to have money management game plans in place to not turn good days into negative days. The way that I like to do that is through what I call a limit up-down. So limit up-down basically means if $1,000 is a good day for you, don't just stop there, because maybe your $1,000 day becomes a $2,500 day. Maybe your $2,500 day becomes a $7,000 day. Your $7,000 day becomes a $10,000 day. Maybe that becomes the best day of your career. And that'll never happen if you just stop when you're up $1,000. But give yourself a limit up down. How much of the $1,000 that you're up are you willing to risk to see if your P&L can get to the next level? The answer should not be all of it if 1,000 is a good day. Maybe it's 300, maybe it's 500. But you give yourself that limit up down. Maybe it's $500. You say, all right, I'm up $1,000. I'm willing to risk half of this to see if I can turn that into 25. But I'm not going to turn 1,000 into a negative day. So $500 is my hard cutoff on the downside. The only kind of nuance to this that we have to keep in mind is open versus closed P&L. The P&L that you see at the top of your screen can be very deceiving. Just because your P&L says that you're up $1,000, are you actually up $1,000? What if every position that you're in were to turn around and stop you out right now? What's your P&L going to be? Not $1,000. So how much of that were you able to lock in? Where are your stops? Because maybe you're up $1,000, but you only have 500 of it locked in between the raising of stops through trailing and through actually booked profit. So if that's the case, and you're looking and you're saying, okay, I'm up $1,000 here, and I want to go home with 500, so I'm going to risk a new $500, but you don't realize that you still had $500 in open risk, and now everything fails. Now all of a sudden you went from being up 1,000 to being at zero, and again, we want to avoid that. So you really got to pay attention to not just like what your P&L says when it's at highs, which can be really deceiving. You want to pay attention to what do you actually have locked in, and how much of that are you willing to risk? Because I've definitely made the mistake of, oh, I'm having a great day, let me add on some risk here and some risk here, and I'm going to put this trade on and I'm going to push things, and I wasn't actually calculating the fact that a lot of this was open P&L, and next thing I know, I'm at zero. And then when you're at zero, you say to yourself, dang it, I was up all this money earlier, now I'm at zero, I'm just going to keep trading. And then next thing you know, you're at your limit down, you're locked out, whatever. I have done that. And then you're really pissed at yourself. So yeah, that's some money management rules and things that you got to build into your thought process. All right, gang. Looks like I got through all the questions and it's almost 5 o'clock, so I'll wrap things up here. I hope you all had a great day. If you didn't, fine. Just make sure that you are continuing to learn and make the adjustments necessary for success. Money management is always the key. To go back to Policing Pip's question, that's why I emphasize it at the end of every morning meeting. I will see you all tomorrow. Have a great night.